Let's bring on Don Vialoux. I love it when Don joins us. He's got so much to say. I love his approach to the markets. And you can find him, you can find Don, that is, at, he's the chief strategist of Tech Talk at www.timingthemarket.ca, www.timingthemarket.ca. Hey, Don, great to have you with us.
Thanks for inviting me, Mike.
Well, I love talking to you because you can set the stage for us. I love the sort of first, the macro view of what the markets are showing us. And has this historically been a good time to invest in whichever you're presenting? So I'm going to start with the overall stock market. And the old adage is sell in May and come back when the snows come in late October. I don't know what that expression is.
Sure. Actually, how it works is normally both Canadian and U.S. equity markets, they reach a seasonal peak sometime around the middle of June, and then they have a tendency to have difficult times going forward right through until around the middle of October. And that's because of unexpected events that occur during that period of time from mid-June to mid-October. Last year it was China blew up. The previous year was Greece that blew up. There's always something that happens in the summertime. And we're getting some early signs that there might be something important happening this summer as well, including the U.S. presidential election.
I'm going with the Italian banks, the Portuguese banks, Deutsche Bank reporting a 98% drop in earnings. I got a feeling that's going to be a very big shoe. I don't know when it really hits the markets, but I know Italy's desperate right now. Portugal joined the parade about 2 weeks ago, and now I've thought for ages that Deutsche Bank is really overly exposed and in big trouble. So that could play into that also. I mean, I agree with you on the U.S. presidential election, but yeah, there's stuff happening, is what I'm saying.
Yeah, and one of the things to watch very closely is the volatility of currencies. If you start to see them going up and down significantly in a very short period of time, then that's a leading indicator that something is happening. A good example of that is normally the U.S. dollar index on a rare day goes up or down 1%. Yesterday it went down 1.25%. That's an early warning sign that there's problems in the currencies market, and this will eventually be shown in the equity markets.
What percentage of time does that sort of adage work, or that general rule of thumb is what it is? It's a general rule of thumb. Obviously, there'll be exceptions. But how reliable is it to say, around mid-June that we have trouble? And I mean, there's so many examples because the declines are usually very sharp, and we certainly got one last August into early September. But how reliable is the indicator?
Well, it's happened every year over the last 10 years, so it's pretty reliable.
Yeah.
Prior to that, there were fewer times when you get these dips, but historically, when there's a problem in equity markets, it happens from around the middle of June to the middle of October.
Yeah, that's fascinating. That's why I love the research so much, because you need everything in your corner to raise the probabilities. And as you say, it's not a guarantee, but it's still a red light that sort of goes, wait, do you really want to take this position at this point? Is it able to overcome any decline that we've got? I just talked to Colin Bouquet about having, profitable companies, because that usually can shield at least some of the decline, if not at least spur a faster recovery. Let's talk within the market itself, though, because I love it when you do that. We've just watched oil, for example, Don, peak in May. I'm proud to say on this show we said that was the peak, Victor Adair on May 7th. Now we've had a pretty good decline. What's the seasonality for it, though? Is this a sort of closer to the probability, or is it an exception?
Well, you're going in the right direction, Mike. Commodity markets in general have some significant inflection points at the end of July, and this July seems to be coming right in line with it as well. Turns out it's not in oil, but tends to be in other commodity-sensitive areas. Let me mention metals and mining, mention forest products, and gold. All three of them have big inflection points at the end of July, which is where we are right now. I love the comment you had just before coming on about people watching their investments and loving what they hear about the things that they own, and
yes.
So it's too late. Let me give you an example of that. If you were owning the base metal stocks here in Canada since the end of January, you've done spectacularly well. the period of seasonal strength for base metal stocks is from late January right through until the end of July. The TSX mining index has gone up 175% during that period of time. People love the sector. Look at some of the local stocks like Tech has gone up over 400% during that time. Spectacular gains. But the end of the period of seasonal strength for the base metal sector is the end of July. So now,
so again, that's a great example. Yeah, sorry, Don, to interrupt. That's a great example, though. So people might be going, you know what? I'm not real comfortable. We've had a really good rise. Well, this is just another check mark for it. You say, well, you know what? The seasonality is not in its favor. And I think that's why, as I say, I've said it many times, but I love that approach because you can find out what the historical probabilities of this being a weak period are. And it's very interesting to hear you say that about those.
The other thing is that there's another seasonal trend that comes in right around the end of July, and you're going to love this one, Mike. It's gold. Mm-hmm. Gold stocks have a history, gold itself and silver have a history of bottoming right around the middle of July. Gold equities and silver equities and so on have a tendency to bottom right around the end of July, and then they move up significantly from that point forward. On average, the Amex, the gold bug index, goes up about 9% from the last week in July until approximately the first week in October. So you can see the possibilities here of a switch from some of these base metal stocks, which you've done phenomenally well, into something which is going to do very well over the next few months.
Great stuff. You can find more with Don at timingthemarket.ca. Don, we got to take a break. I got to come back. I want to come back a little bit. You're hitting all the hot spots actually right now. If you look at the market, you've got some debate going on about gold. It had a nice rise, and there was lots of reasons to propel it. It's sort of stalled at this point, so it's very interesting to hear your take on gold. I want to ask is also, though, the gold bullion being reflected in the market. I look at the oil stocks, for example, ran way further than the oil price, no matter how spectacular. Same thing happened in gold. Is there a difference in the seasonality between sort of the metal in that case, or the commodity in the other, and the stocks that surround them? I'll do that with Don Vialoux when we come back right here on the Money Talks Network. Coming up, I've got a shocking stat for you. More examples of your tax money at work. Plus, I got a Goofy Award. This may be the dumbest thing I've heard a major politician say in a long time. Lots of competition, I know that. But this guy climbed up that competition ladder with an incredible stupid statement, and I'm going to share that with you coming up in the quote of the week. Right now, though, timingthemarket.ca, I've got Don Vialoux there with me. Hey, Don, let me come just quickly to a question I had regarding seasonality when you apply it to stocks, let's say gold stocks and gold bullion. Is it going to be the same? Because I just watched the stocks go way ahead of the bullion, I thought.
Yeah, it's a great question because historically, when looking at the gold and gold equity seasonality, when gold equities are outperforming gold, which is what they're doing this year, that's a very, very positive sign that the gold and gold equity seasonality is clicking in for that particular season. So we've already had some pretty good evidence that the gold equities are significantly outperforming gold. And that implies that we've got a very good chance of some pretty good moves in gold and gold equities coming into the summertime. I'm also looking at silver relative to gold, and recently silver has been outperforming gold. Now that's unusual for this time of year. Usually gold does outperform silver, but the fact that the commodity-sensitive silver is outperforming gold this summer is also a very positive sign for the gold seasonality.
Let's talk about other things here that have caught your eye that you think, whether it's to stay away from or take profits in, or whether it's, hey, this might be the time to at least consider getting in.
Yeah, it's kind of interesting because if you look at the VIX index and then you look at the seasonality in gold, and you put the two charts on top of each other, they're almost identical, implying that when the VIX starts to spike, as it normally does in summer because of these unusual events, that's the trigger for gold and gold stocks to move significantly higher. Mm-hmm. And we've had some interesting things happening just during the last, 48 hours. We had, for example, yesterday we received the latest estimate for the second quarter GDP in the United States. It was substantially less than expected. implying that, hey, things are not going as well as expected in the U.S. economy, and therefore the Fed's not likely to increase the Fed fund rate in September or November, and that implies that there's greater volatility coming into the markets in general, and that was certainly shown by the big drop in the U.S. dollar index yesterday. Look for more volatility in commodities and currencies, and that is positive for gold.
You know, it was interesting, as you say, here the U.S. is reporting way lower than expected GDP numbers, and the market loved it. But you've drawn that line for us because the market then says, oh, good, interest rates aren't going to go up in this kind of a scenario. So you can just see, poor investors are sitting out there, Don, and, this comes right in the aftermath of the Federal Reserve saying they weren't raising rates. This is midweek, said they're not raising rates, but we're going to soon, and then you get that kind of a number. And the market just goes back and forth on it.
They've been saying that they're going to raise rates for a long time, and more evidence suggests that they probably will not. That actually is positive for bonds and interest-sensitive securities. In fact, yesterday we saw the bond market in both in Canada and the United States move very, very strongly on the upside. So that's normally what happens in the summertime. Interest-sensitive securities, including bonds and REITs and all the interest-sensitive securities in general, including utilities, normally do very well in the summertime, right through until around the middle of October. And then, of course, that's when the next inflection occurs, when you go into the more economically sensitive sectors.
That may be very interesting then, given that the Federal Reserve looks desperate at least to jawbone that rate up, but let alone take some action. I mean, I was looking at some of the huge probability of people saying it's before the end of the year, others saying September. I don't think July was a big surprise, but, in September, and that could, again, as you just alluded to, supply a lot of fireworks for this market going forward.
Well, the next FOMC meetings are, I guess, September the 23rd. The next one after that is November 1st, both of these just prior to the presidential election. The Fed's not going to want to do anything prior to the next meeting, which is December 16th. So, their attempts to increase the Fed fund rate continue to be deferred, and it could continue right through until next year.
That's a great point, though, is how many decisions sort of get put off, especially when we're in the election period. It seems like it's been on for a year. That's actually thanks to Donald Trump because there was so much interest raised by his candidacy. But, now we're in that election phase in earnest. So I absolutely agree with you, but it's important to put it on our radar that a lot of moves like the Fed move, no matter what people jawbone about, it's very unlikely to happen because they don't want to have any impact on that federal election.
Yeah, let's talk about another sector which is important in BC, and that's the forest products.
Good point, yeah.
Since the end of June, the forest product stocks have done very, very well. There's actually an ETF that you can trade that has a basket of all the forest product stocks in North America. The symbol is an easy one to remember. The symbol is WOOD, wood. Since the end of January, or last week in June, wood has gone up 13%, which is a pretty good run.
Yeah.
But if you look at the Canadian forest product stocks, Canfor is up 30%. West 4 is up 20%. Inter4 is up 35% since the last week in June. Huge gains. And the period of seasonal strength, period of seasonal weakness starts at the end of July. We're at the end of July now. Anybody that's invested in this sector during the last 6 weeks done phenomenally well. But now we're getting close to the end of the period of seasonal, we're reaching the period of weakness. And so look at your owning in this sector a little bit closer because you may want to take some short-term profits.
Yeah, fascinating stuff. Our time is very short here. If there's anything else you want to just, generally to our investors, just say, our listeners, this is something you should be aware of.
Yeah, this is a very important inflection point happening in markets right now, and it's a great opportunity to take some real good profits off in certain sectors, things like the metals and mining and the forest products, and move into something which is going to make you some money during the next little while. And the gold sector and the silver sector and gold equities are the sectors to look at.
Just very quickly, are currencies subject to seasonality too, to the same degree? Obviously, that's the one thing I can be assured when we talk about it on the show, that everyone has a participation in the Canadian dollar, whether they're investing in it separately, through the futures market or an ETF, et cetera. It doesn't matter. We're getting paid in it. Our homes and other assets are measured in it. So, yeah, is there anything of note about currencies when it comes to seasonality?
Great question. In fact, I should have mentioned this earlier. Turns out the U.S. dollar index enters a period of seasonal weakness at the end of July. So it fits into that scenario as well. Now, the U.S. dollar index does vary significantly, up and down during the year, but there is a period of seasonal weakness into the month of August. That is going to help things like gold and gold equities going forward. So be aware of that as well.
It certainly did the oil price on Friday when you got the big drop, as you alluded to. The big drop, in the dollar index on Friday. Of course, oil's measured in that, so presto, it goes up. The Canadian dollar goes up. So, yeah, it's fascinating to see how all the factors start coming together. And as you say, you got to note this time of year and look for some reversals. The down might go up and the up might go down kind of period.
Yeah, both Canadian and U.S. equity markets are currently overpriced and appeared to be vulnerable. In fact, we saw last week both the Dow, the S&P, and the TSE Composite recorded small losses. We've had a huge momentum spurt coming into the early part of July. That momentum seems to be sputtering on the downside now. So we're vulnerable for a correction in equity markets in general coming into the month of August. So, be prepared accordingly.
Don Vialoux is my guest. You can find it at timingthemarket.ca, and this officially begins my lobbying for Don to come out to the World Outlook Conference. He doesn't know that yet, though. I'm lobbying him right now for it. Don, we appreciate so much you always finding time for us, and a great friend of the show and tremendous insights to share. Thank you.
Thanks, Mike.